Here's the problem most partners don't see coming. You can win every deal in front of you and still stall out at gold. That's because winning deals and building a business are two different skills. One is tactical, the other is strategic. Here's a number that should stop you cold. 65% of Microsoft partners could fail by 2026 if they don't pivot. That's not a prediction about the market. It's a prediction about the gap between what partners think works and what actually does. We'll walk through the 12 specific mistakes that keep partners stuck. Not theory, real mistakes backed by real recovery data from partners who made them and pulled out. Here's the thing, this isn't a strategy problem. You know what you should be doing. It's an execution problem, and it's costing you millions. The expectation gap. The most common mistake I see in the ecosystem is early stage partners assuming marketplace listing equals lead flow. I listed on marketplace, so leads should come. That's the misunderstanding. You publish your solution, get transactable, and then sit around waiting for the windfall. And it never comes because that's not how this works. Microsoft is an amplifier. Think of it as a microphone. If you don't talk into it, nothing happens. You have to put something into it to get amplified. Veeam learned this the hard way. Early on, their connection to Microsoft was basically, we sit on Hyper-V. That was their story. Great product, happy customers, happy partners, but they had no real narrative for Microsoft beyond, we're super cool and we're in the stack. The hard truth is that leads are a mature output of the partnership, not a starting point. You don't get leads because you listed. You get them after you've shown you can win, demonstrated value, and proven that Microsoft's field time invested in you is a good bet. So reset the frame, be proactive, show up with a story, demonstrate value before you ask for anything. That's where the partnership actually starts. The ownership void. Here's the thing about resetting expectations. It doesn't matter if nobody owns the relationship. That's mistake number 2, no dedicated partnership owner. So often, the Microsoft partnership becomes someone's third job, the thing they do on Friday when they have extra time, and that's exactly the results you get. It's a third or fourth priority for multiple people, and that shows up in your numbers. It also shows up to Microsoft. Here's the paradox. High-impact partnerships come with high complexity. Microsoft is a massive company. The returns are enormous when you get it right, but it requires maniacal focus. You need someone who wakes up every day with one job. Move that partnership forward. That brings us to mistake number 3, misaligned sales compensation. If working with Microsoft feels like a tax to your sales team, you've already lost. When your reps think these are Microsoft deals, so I don't get paid, they'll avoid them and poison the well for everyone else. This is one of the few things I call a non-starter. Do not begin a partnership motion until compensation is solved. Unwinding a bad start is harder than delaying. Once your sales team develops a distaste for partnership deals, pivoting is extremely difficult. Look at Veeam. Their alliance leader sits under channel marketing. The VP of channels has an alliance leader on their team. And they made sure the alliance folks and the cloud sales leaders are in the same room. Because when you come out of a working meeting with outcomes, you don't want to go do internal selling again. You want a joint plan that you're going to run. Get the ownership right, get the comp right. Everything else builds on that foundation. The readiness gap. Ownership alone isn't enough. The organization has to be ready to support the partnership, and that's where most partners hit a wall. Mistake number 4. Finance isn't ready for marketplace payments. This sounds like a back office problem, but it kills deals. Here's what happens. Microsoft sends an incentive payment to the partner. The finance team doesn't know it's coming. They think it's a mistake, so they send it back. And once you send it back to Microsoft, good luck getting it again. That money doesn't come back easily. I've seen partners leave hundreds of thousands of dollars on the table because their own finance team didn't know how to process a marketplace transaction. The fix is simple. Tell finance it's coming proactively before the money hits the account. Align on how private offers work, how incentives get paid, and where the money goes. Because if it hits the bottom line and gets absorbed into general revenue, it's gone. You can't get it back for the partnership team. Mistake number 5 is even more common. Weak Microsoft messaging. Partners talk about their product, but Microsoft sellers think in package place. Those are two different languages. There are 500,000 partners in the ecosystem, and a seller can't be expected to understand 500,000 languages. You have to be the one who translates, who makes it easy for them. What cuts through is specificity. Not we solve data problems. That's noise. What works is, here's the play for a security specialist covering healthcare accounts, or here's the play for an account technology strategist in financial services. You map your solution to their role, their quota, their priorities. Veeam figured this out. They broke their entire offering into specific plays, identified which seller roles to target, security specialists, ATSs, business application specialists, and built messaging for each one. They didn't go in saying, we're Veeam, work with us. They went in saying, here's how we help you hit your number in these 10 accounts. That's the difference between noise and signal, and Microsoft sellers have a very high threshold for what counts as signal. The credibility trap. Once you're ready internally, the next trap is thinking credentials alone. Build credibility. Mistake number 6, treating certifications as a logo. I have the badge, now give me the business. The thing is, certification unlocks potential benefits, not instant results. Getting that designation doesn't mean Microsoft hands you deals. It means you're eligible to participate. And that's it. You still have to do the work. I see partners get the designation and then never activate partner-reported ACR or tap into the incentives it unlocks. They treat it as a trophy instead of a tool, and trophies don't generate pipeline. Mistake number 7 is closely related: having no one-page partner plan. A 30-page plan that no one reads is worse than no plan at all. It gives you the illusion of preparation without the reality. The one-pager does 2 things. First, it proves you actually have a plan. You're working towards something, you have goals, you've aligned with Microsoft's priorities, and you're tracking progress. That's the foundation. Second, it gives sellers a quick reference when you meet different personas across Microsoft at events, on calls, or in account planning sessions. You need something you can hand someone that says, this is who we are, this is what we're doing together, this is how we win. Veeam made this shift explicitly, moving from "we're certified, work with us" to "here's exactly how we align with your priorities." They stopped leading with the badge and started leading with the plan. That's a completely different conversation. One is passive, the other is proactive, and Microsoft responds to proactive partners. The data black hole. Planning matters, but data is the currency of the partnership. And most partners are giving bad signals. Mistake number 8, not sharing referrals in Partner Center, or worse, sharing irrelevant data. This is the foundation of partnership trust. Data is how Microsoft makes decisions. It's how they know where you're strong, what customers you're working with, what industries you're penetrating. When you log nothing, they have no data to work with. When you log partial data, they assume it's complete. Both are bad. But here's where it gets worse. Mistake number 9, treating all deals as co-sell. Flooding the system with 1,000 deals when you actually need help on 3 to 5. I worked with a partner who was sharing about 1,000 deals a year, every single one marked as co-sell. And the problem is obvious. There's no way they could take 1,000 calls with Microsoft sellers. Even if they could, most of those deals didn't need Microsoft's help. They've been around for decades and can sell most of their solutions by themselves. The dilution problem is real. When everything is co-sell, nothing is. Sellers stop paying attention because they can't tell which opportunities actually need their involvement, and your signal gets buried in your own noise. Veeam made this exact mistake early on. They put every deal into Partner Center hoping it would make them look good, and it backfired. Because when you flood the system, you don't look strategic, you look desperate, and Microsoft sellers can smell the difference. The fix is simple but hard to execute. Identify the 3 to 5 high-value use cases where you truly need Microsoft help. The deals where a Microsoft seller can open a door you can't, the accounts where your competitor is already entrenched and you need a warm introduction, or the opportunities where having Microsoft validate your solution changes the buying dynamic. Focus there. Be surgical. Create positive experiences with every single co-sell interaction, because when you narrow your focus, you actually create more positive experiences. You become the partner who's easy to work with, who shows up prepared, and who doesn't waste anyone's time. And that's when the real opportunities start to open up. The growth bottleneck. Even with good data flowing, most partners still leave money on the table. Mistake number 10 is underusing rewards and incentives, letting Microsoft funding sit at the bottom line instead of reinvesting it in the partnership. Here's how it plays out. Microsoft sends incentive dollars to the partner, the finance team sees a deposit, it hits the general ledger, and then it disappears into corporate revenue. The partnership team never sees it, so they can't use it to fund events, build co-marketing campaigns, or hire headcount. It just vanishes. I've seen partners leave up to $400,000 unclaimed per deal cycle, not because they weren't eligible, but because they never activated the programs, never told finance it was coming, and never built the reinvestment plan. Winning partners do it differently. They use incentives as pre-sales fuel, funding customer workshops, sponsoring events, and building co-marketing campaigns that generate pipeline. They reinvest every dollar back into the partnership flywheel because they understand that the money is not profit, it's rocket fuel. Burn it at the bottom line and you don't go anywhere. Mistake number 11 is scaling without ops ready. And this one kills momentum faster than anything else. You have a process that works for 5 deals a month, so you scale to 50 using the same process, and it breaks. You didn't amplify a good process, you amplified a bad one, making your flaws bigger and faster. Veeam took the opposite approach. They didn't scale until engineering alignment was in place, sales play development was locked, and co-sell activation was proven. They built the foundation before they built the house. The ops backbone matters. RevOps needs to be involved early, not after you've already started scaling. They manage private offer workflows, handle deal registration, and make sure your CRM talks to Partner Center correctly. If those systems aren't connected, you're flying blind. Get the ops right first, then scale. Scaling a broken process is just a faster way to fail. The communication breakdown. Operations matter, but without rhythm, the partnership stalls. That's mistake number 12. No feedback loop with Microsoft. I call this the Kumbaya meeting trap. You bring both sides together with big PowerPoint slides and executives lining up on both sides of the table. You high-five each other at the end, and then crickets. Nothing happens until the next quarterly review. And by then, whatever momentum you had is gone. The partnership goes stagnant because the conversation disappears when it matters most. Account planning, pipeline updates, and incentive alignment are not quarterly conversations. They're weekly conversations. What works is weekly or bi-weekly tactical meetings, not monthly reviews or quarterly business reviews. You already have the strategy alignment, so you don't need another deck. You need a working session where you tune the machine. Veeam figured this out. They don't wait for monthly business reviews. They hold tactical meetings every Thursday, same time, same people. They talk about what's working, what's not, whether the messaging is resonating, and whether they need to tune the approach. It's not a status update, it's a working session. And here's the thing about the PDM relationship. Your partner development manager is the most important relationship you have at Microsoft. They navigate programs, connect you with field sellers, and advocate for your success internally. But most partners treat them as transactional. They only reach out when they need something, and they don't build the relationship, share wins, or invest in the connection. The moment you start deprioritizing the rhythm and the communication, things go south fast because Microsoft is a massive organization. If you're not in their field of view, you're invisible, and invisibility is the fastest path to stagnation. The recovery playbook. These mistakes are common, but they're also fixable, and the best proof is Veeam's full arc. Veeam started as a company that couldn't even get Microsoft to return their calls. Their co-founder used to joke they were a drinking company with a software problem, fun and scrappy, but not taken seriously. Fast forward to today, and they are on track to hit $2 billion this year. They signed a 5-year agreement with Microsoft, and Microsoft made an investment in them. That's not a pivot, that's a transformation. So what did they actually do? 3 pillars, and the order matters. First, engineering alignment. They had to build deep technical hooks into Microsoft's roadmap, not just saying we sit on Hyper-V, but actual integration and product level commitment. That came first because without it, nothing else is credible. Second, GTM packaging. They broke their offering into specific plays for specific seller roles, not just we do backup. That's a product. A security specialist needs a different conversation than an account technology strategist, so Veeam built both. They mapped their solution to Microsoft's compensation structure and made it easy for sellers to say yes. Third, co-sell activation. They didn't go broad, they went deep. They identified a targeted set of accounts across several operating units, not 1,000, not 300, but a smaller set with strong sponsorship. They went hard on those accounts, then came back as a team, tuned the messaging, and repeated. The tactical shift is the key. Move from we're partners, work with us to here are 10 accounts, here's the play, here's the seller role. That's a fundamentally different conversation. One is a request, the other is a plan, and the commitment lever matters. Veeam committed to Azure. They didn't just say they were aligned, they put their own product roadmap on Microsoft's platform. They made it logical for Microsoft to invest in them because when you have skin in the game, the partnership becomes mutual. You're not asking for favors, you're building something together. One more thing. Veeam uses the customer zero approach. They use their own tools on themselves before asking customers to buy. They ran their own data resilience assessment internally, created their own success story, and when they go to a customer, they can say, here's how it made a difference for us, and here's how it'll make a difference for you. That's credibility you can't fake. The bottom line is this: 65% of partners may fail, not because the ecosystem is broken, not because Microsoft changed the rules, but because they won't make these specific pivots. The mistakes are known, the fixes are proven. The question is whether you'll do the work. So those are the 12 mistakes. And here's the thing, none of them are fatal on their own, but ignoring them is. Pick the one that hurts most right now, the one that's costing you the most money or the most sleep. Build a recovery plan around it this week, not next quarter. This week. If you're building a partnership that actually works, subscribe and I'll see you in the next one.